Look, we're really delighted to be able to welcome today, as we suggested, a number of industry-leading figures to provide context, background, and their views on the evolution of digital asset markets. Firstly, therefore, we're really delighted to welcome Meltem Demirors, who's the Chief Strategy Officer of CoinShares. There are many people who have been involved in the digital asset industry for many years and are flag bearers and supporters and quite outspoken in their views of the industry. That's a positive thing, Meltem. And so in that sense, we're really delighted to welcome Meltem to host the opening keynote. Meltem, can I pass over to you, please?
Yeah, absolutely. Thank you, Matt. Outspoken. That's one I hear often. So I'm really excited to be here with everyone this morning. I'm coming to you from the East Coast of the US, where it is evening. And so it's really great to be here and to see such an interest in digital assets in the Asia Pacific region. Obviously, we're very grateful to our friends at OSL for hosting this event, but also having worked with OSL over the last few years through a number of different firms has been a wonderful experience, and everything they've done to help bring trust and transparency and legitimacy to the digital asset space very much resonates with what we do at CoinShares. I'm excited to share that as of last week, we are a publicly listed company. We commenced trading on the NASDAQ Nordic on Thursday of last week. And as of yesterday, our assets under management stand at 4.8 billion, which is also really exciting. We've just seen a tremendous amount of interest in our exchange traded products, which trade under 2 platforms available throughout Europe. We've also seen a tremendous amount of activity on the trading side of our business. And I focus on strategy as well as our proprietary investing, venture investing, M&A, and growth opportunities. But what I'm going to talk about today is not my business at all. Since this is the first day of this event, since this is the first talk you'll listen to, I really wanted to paint a larger picture. I've been in this industry for the last 7 years professionally, which, in traditional industry is not a long time, but in the crypto space is a lifetime. And what I really wanted to talk about today brings together 3 of my favorite topics: cryptocurrencies, and I'm going to focus specifically on Bitcoin. It brings together energy. My background prior to crypto, I worked in the energy industry in trading, M&A, and corporate treasury at ExxonMobil. And I'm also going to talk about the future of technology and the impact technology has on the power dynamics in our world. So my slides, I'm going to just pull them up quickly. So give me 1 moment. My talk for today is titled Silicon Satoshis and Superpowers, Placing Bitcoin in the Larger Macro Narrative. Disclaimer, you can read this, but nothing I say is investment advice. Basically, my compliance team would like me to note that. So where I really want to start is the nature of power in our world. When I started working in the corporate world, it was 2009, in the midst of the financial crisis. And at that point in time, the 10 largest companies in the world were companies largely who made physical things or operated in the realm of traditional finance. And so a lot of the names you see here on the left-hand side of this slide are petrochemicals companies, oil and gas exploration companies, companies who really operate in the realm of the physical. And the combined market cap of these 10 firms was $2 trillion. Now, a decade and some change later, the largest companies in our world don't actually make physical things anymore. If we look at the largest companies in our world today, Saudi Aramco, very much still in my old world of energy, but many of the others you'll see on this page, whether it's Apple or Delta, which is a Thai company, or Alibaba and Tencent, they don't make physical things. They don't produce and manufacture digital goods. And their combined market cap today of these 10 companies is $12 trillion. And this is the result of rapid financialization. And what we've seen is the returns to capital in our world have not accrued proportionally. Investment in tech and the digital world has far outpaced investment in core equities and core growth sectors. And really the reason I want to share this slide is I really want to lay the groundwork for what I want to talk about today. The most powerful companies in the world are intermediaries. And what they intermediate is access to our digital lives. I have a supercomputer in my pocket, and I'm sure many of you do as well. And from the morning, this morning when I woke up to tonight when I'll go to sleep, I'm going to interact with all of these companies and their platforms and be feeding them tons of data and information about myself. And in addition, a lot of these companies now also control my financial life. And we're going to talk about why that's significant. And the revolution or the evolution, whatever you want to call it, it doesn't just stop here. So I talked about 2009 to 2021, the last 12 years. My belief is that in the next decade, the world will be defined by fundamental revolutions in the energy industry, the compute and connectivity industry, and the finance industry. And for those of you who know a little bit about Bitcoin, you will quickly see that Bitcoin is the perfect combination of all three of those industries. Furthermore, why this matters and why it matters for this talk in particular is that companies and nations alike will spend trillions of dollars on R&D, defending IP or intellectual property, and the physical infrastructure that is needed to secure their data and access to global systems. Cyberspace is the next frontier. We used to live in a physical world. We used to live in a world where who we were and what we did and who we interacted with was defined by the borders of the countries in which we lived. We don't live in that world anymore. We live in an exciting, scary, new digital world. And in this digital world, the concept of physical jurisdiction that has defined the nature of power in our world since the dawn of human history doesn't exist anymore. And this is a fundamental shift. It's one that I think most nation states have not yet really grasped. And it's one that's also profoundly exciting and creates tremendous new opportunities for savvy investors like yourselves. So welcome to your digital overlords. Hopefully we have fans of the movie The Matrix here. I'm a huge fan of that film series. It was so incredibly insightful. But our world today and the world we operate in, the experiences we have when we're online are defined by a narrow set of algorithms and companies and experiences. And what's really interesting is we are evolving and moving into a new era of geopolitics. If we think about the era that started when World War II ended, and I think this era really, lasted till about 2010, although arguably it may have lasted longer, the scarce resource that nation states used to compete for was oil. And the resulting global landscape was shaped by that quest for oil. We fought wars to secure access to oil. There was conflict in oil-rich regions. We shifted off the gold standard in 1971, and we saw the rise of the petrodollar, which was really a function of this quest for oil and the supremacy of oil. We saw the rise of the OPEC cartel, which shaped the geopolitical landscape for decades to come. And oil supermajors ruled the world. When I worked at ExxonMobil, it was the largest company in the world. This was only 7 years ago, and that is no longer the case, not by a long shot. We now have a single company, Apple, that is worth over $2 trillion. That is something I couldn't even have conceptualized 10 years ago when I started trading. This new era that we're moving into, though, is not defined by oil or physical resources. I believe this next era in politics will be defined by the quest for semiconductors, which are the fuel that will power this digital world we're moving into. We will fight wars to secure access to rare earth metals and semiconductor fab. We'll shift away from the petrodollar to a multipolar currency world, something which, by the way, has already happened. We just don't realize it yet. We'll see the rise of tech overlords, our Agent Smiths, if you will, for you Matrix fans, and semiconductor fabs will rule the world. let's just talk briefly about how this is already playing out. You might be sitting here saying, okay, Meltem, great. That sounds very sci-fi, sounds very dystopian, but it's years away. Not so. This is happening right here and right now. We, at this point in time, are living through one of the great semiconductor shortages. We are seeing automotive sector get hit really hard by this shortage. And automotive is just one sector that's getting hit hard. This is happening across the board. Every sector that's dependent on semiconductors as an input, which, by the way, every manufacturing sector is, because everything we do relies on compute and connectivity, is being impacted by this shortage. But what's happening in the automotive industry is really interesting. Ford, Volvo, Mercedes-Benz, Chrysler, all of these automakers have cut output because they can't secure the chips they need to manufacture automobiles. They have workers on standby. They have plants that are idling, and it's being called Chipageddon in the automotive industry. This global chip shortage, by the way, is hitting automakers at the worst possible time. Many of them cut back their production schedules in 2020 in response to the global pandemic and are seeing a surge in demand. And in fact, what's happening is in Germany, car makers actually went to the Merkel government and said, you need to go and negotiate new treaties to get us access to semiconductors, because the automotive industry is vital to the German economy. So this has gone from being a sector-specific, supply chain-specific challenge to now becoming a geopolitical emergency. And the automotive industry is just a sign of the things that are yet to come. Every single industry, including the cryptocurrency industry, by the way, is facing massive shortages of chips. So this is the world we live in today, not tomorrow. It's happening right here, right now. And these are the mythical creatures of our world. For those of you who are nerds like myself, you'll recognize this beautiful S19 down in the lower left. The RTX 3090s, the newest GPU from NVIDIA, sold out everywhere, retailing for 1.5 to 2x MSRP. The What's a Miner is an ASIC that's produced by a new mining company. Production runs on a What's a Miner, by the way, are sold out until June of 2022. So if you want to get your hands on a new gen ASIC, you can't even buy one until 2022. And even then, you can only buy it if you're a large scale buyer. People are contracting these things out. They're buying entire production runs. And then lastly, in the top right-hand corner, you'll see the AMD Ryzen. I'm trying to get my hands on some of these right now. These are CPUs, top-of-line CPUs, and they're impossible to find. These are the mythical creatures of our world. It's not oil we need. It's chips and semiconductors. And here's the other thing I just briefly want to touch on. We don't live in a world defined by single hegemon anymore. We live in a multipolar world. But the players in this world are no longer just nation states. There are new players in the game, and the game is changing. We're seeing the emergence for the first time of corporation states, what I call them. The advent of Facebook's Diem, the advent of Kakao's Clayton. They're corporations who are creating their own payment networks, their own currencies, and have user bases that are larger than the population of any country in the world. We have metaverses that exist. We have people who are spending hours a day in these metaverses, transacting in the currencies native to these metaverses. I myself am a fan of Animal Crossing. I spent a lot of time and a lot of money in the EVE ecosystem, but there are metaverses popping up everywhere where people are spending hours and hours of their time and millions of dollars of their money. And in the midst of all of this, we have Bitcoin, the first decentralized digital state. And for the first time, we have non-state actors that are competing on the global stage for power, for prestige, and for control. And these entities have a tremendous amount of capital. So let's talk about Bitcoin in the midst of all of this. So what does all of this mean for Bitcoin? Okay, so the Bitcoin value chain at its core just has 4 very simple steps. You create a transaction, you broadcast that transaction to a peer-to-peer network of nodes. That transaction is then validated and propagated, and then it's verified by being mined into a block. So what's really important about that entire value chain is no matter how efficient you are, how good your tech is, how many chips you have, how low your power costs are, whatever it may be, no matter how efficient you are, you will never produce more Bitcoin than the block size reward. And this inherently introduces the concept of competition into the Bitcoin network. And Bitcoin isn't just software. I think one of the fundamental misconceptions people have is that Bitcoin is software and it exists in the ether. Any device that you plug into a wall that consumes power, that connects to a network, has physical substance, has physical materiality, and Bitcoin is no different. Bitcoin is an extremely hardware-intensive industry that also consumes a tremendous amount of energy. And in my view, Bitcoin is really the next step in the future of what compute and connectivity in our world will look like. Bitcoin is the first private peer-to-peer financial network, and it's also a telecommunications network. What it happens to relay today is information about financial transactions, but as we've seen, other information can also be added into the blockchain. And there are other blockchain networks that are emerging that specialize just in the transfer, preservation, and integrity of information. For the first time, humans have a verifiable record of history that cannot be altered. Now, what provides Bitcoin with this history? A ton of CapEx. So as we look at this Bitcoin value chain, as we move from creating transactions into verifying transactions, we go from software-driven asset-light business models into very asset-heavy business models. And as we begin to refine the relationship between physical assets and the maintenance and management of the Bitcoin network as a communication protocol, it is my belief that firms and nation states alike will compete to secure access to the Bitcoin network, just as we've seen with the compute networks we use today. Now, Bitcoin's primary security measure is its hash rate. And if we look at Bitcoin's hash rate, which is tracked here in the purple line, or the amount of computational energy being utilized to secure the Bitcoin network, it tracks very closely with Bitcoin's price, which is reflected here in the blue line. And I haven't even added the last 6 months of data. It's my fault for being lazy here. My apologies. But Bitcoin requires two inputs: silicon, semiconductors, and energy to provide its security guarantees. So what we have here is a perfect storm. We have a financial technology that's powered by semiconductors and energy. And we need fundamental revolutions in both of those industries to power the revolution we're driving in finance. So what I believe will happen over the next decade, and what I'm really excited to be a part of and build and invest in and work to capitalize at my firm CoinShares, but also beyond in partnership with some of you listening today and firms like OSL and others, is this. I believe that the Bitcoin network is one of the most foundational technologies that exists in our world today. Bitcoin today operates in the realm of finance, and people often call it digital gold. But gold is a shiny rock. Bitcoin is not a rock. Bitcoin is magical intergalactic internet money. Now that sounds crazy because it is. I believe that Bitcoin will quickly move out of the realm of solely finance into the realm of compute and connectivity, energy management, and physical infrastructure, and become a critical component of cybersecurity and our global military industrial complex. At the end of the day, accessing the Bitcoin network and operating nodes in the Bitcoin network means nation states, corporations, and private actors can have control over what's communicated, how it's communicated, and who it's communicated to. And that, my friends, has always been the true nature of power in our world. So what will the future look like? This is a data center filled with server racks. I am aiming to build at some point in the near future or distant future a ship filled with ASICs that will run the Bitcoin network. But I think our future looks very different from our past. And I think recognizing the fundamental role that Bitcoin will play in this evolution will be a critical step to help accelerate innovations in finance, energy, and compute and connectivity. So I'll pause there. Here's my contact information. Please, I would love for you to tell me what I've missed or why I'm wrong. And with that, Matt, I'd love to hear your thoughts.
Hi, Meltem. Terrific presentation. Such an interesting view and such a well thought out, well constructed view of the role of Bitcoin and digital assets within markets, within economies. However, I guess if we do play devil's advocate, and this sort of, I think this goes to some of the questions that we're seeing from people. What worries you here? What gets in the way? What's the speed bump? Now, clearly regulation and governmental regulation to the network is something that one of the questions is we've just seen the Indian government, for example, prohibit Bitcoin and digital assets. So that's something I think that is absolutely front and center of on the mind.
Right, but Matt, if I may there, right, what the Indian government banned, let's be very specific about what was banned was the trading of digital assets. How are you going to ban people from running code? And this is the same battle we had, by the way, in the 90s, right, when governments deemed that encryption technologies such as RSA were munitions. People would walk through airports with lines of code written on their shirt that were RSA code, and they would be stopped at borders for carrying weapons across borders. Those were the first crypto wars. We're now in inning 3 or inning 4 of the crypto wars. So while governments can ban businesses located in their jurisdiction from offering trading services or from connecting digital assets to the broader financial ecosystem, governments cannot stop individuals, private individuals, from running open source code, and they cannot shut down a network of peer-to-peer nodes that are located in undisclosed locations all around the world. So while there are existential threats that maybe will dampen the market activity around digital assets, I think the idea of banning cryptocurrency at this stage is one that is extremely complex and fraught with many of the challenges that we saw around peer-to-peer file sharing and BitTorrent in the 90s and early 2000s. So I just do want to add that as a caveat, because it's important to specify what's being banned and where really the control points are.
Okay. Because I think in the customers that we talk to, the institutions like that you'll talk to, it is that is a consistent theme. I think as the industry has moved through some of the other factors that might prohibit or impact an institution investing, we see that that's one of the questions that remains. So I guess following on from that, then, as I think about some of the participants that we know that are in the audience today that are just beginning this journey, how do they take their first step into this? I mean, if you're let's say you're a $10 billion family, or you're an endowment or a pension. I mean, if you think back as you started this journey, I mean, how do you go through this process of education, understanding, actually putting money to work?
Yeah, that's such a great question, Matt. I think where everyone typically starts is finding a way of getting exposure to the space that feels comfortable and familiar to them. And luckily today in 2021, there are a number of avenues through which people can access digital assets. We offer exchange traded products. There are many other ETP providers and other institutionally appropriate funds that exist in different jurisdictions around the world. So that's a great route. There are private funds, whether those are venture funds, actively traded funds, delta neutral funds, that they can allocate to. They can also get exposure directly. I mean, there are firms like OSL and others who offer a very easy way for people to get exposure to digital assets, to custody those assets in a secure and trusted manner. I think that's really step one for most. And it is, I will stress, I think there's an important journey that you go through as you get exposure to digital assets, where as you learn, and we call it the proverbial rabbit hole, right? You start at the top. I sort of liken it to, again, I'm going to use a Matrix analogy. In the beginning of the Matrix, right, when Morpheus says to Neo, you have two choices, right? You have the red pill or you have the blue pill. You have a similar choice with Bitcoin. Some people take the blue pill and they're like, I don't want to deal with Bitcoin. Scary, scary, ew, ew, not going to engage. Or you take the red pill, and then there's a journey you go through. But I think through that process of going through that journey, everyone's going to land in a place that feels comfortable for them, that makes sense for their operational strategy, for their risk tolerance, for their duration timeline, right? We have very different duration preferences. But what we have found generally, and what I have found over the last 7 years, is as I work with institutions and as they start to learn more about Bitcoin and digital assets, there is something here for everyone that is fundamentally just so intellectually engaging, whether that's Bitcoin itself, whether that's tokenized securities, whether that's decentralized finance or DeFi, whether it's NFTs. There is something in this sort of broad umbrella of digital assets that, regardless of background, regardless of risk tolerance, is just so fascinating that I find, most institutions I work with, they just get hooked. And from there, the interest sort of expands out. And typically it also requires investment in specific competencies, whether it means, bringing in staff for specific expertise or getting more comfortable with holding your own keys. It is a journey and it requires an investment of time.
Terrific. All right, look, we're right up against the clock. So, look, I just want to thank you very much for sharing with us. It's such an interesting view of the industry. It's great to have had you. Again, thanks for joining us, Meltem, and have a great evening over there. I hope it's not too cold.
Thank you, and great evening. Good morning, I should say, to all of you. I know Michael's up next. I call him the master of the cyber hornets. So I'm sure I'll have fantastic insights for you as well. Thanks for having me.
Cheers, Meltem. Thank you.
Bye.